Hello and welcome to the Mutual Fund Show. My name is Niraj Shah. Over the next 20 minutes, we'll talk all about funds, but in a differentiated way. Because as our tease suggested, there are two indices or two spaces, two themes, or maybe three themes that everybody talks about: healthcare, technology, specialty chemicals. There's no thematic funds on specialty chemicals, too small a space. But healthcare and technology, there are funds which are there. There are funds which are launching. There are funds which have done really well. In fact, one of the funds has a 2-year anniversary of sorts today. And we've got a really powerful duo who are joining us today to talk about whether it makes sense for you as an investor to go out and invest in these funds. Because what typically happens, viewers, is that you look at the last 6-month data and say, oops, gaadi nikal gayi. Maybe that is not the case. Radhika Gupta, Mahesh Patil, both of them need no introduction. They join us right now on the show to talk about their thoughts. Both of you, thank you so much for joining in. Viewers, you could be forgiven for thinking it's a Diwali special. It isn't. But yes, the guests are as powerful. Radhika, let's start off with you. I was talking about who do we start with. Mahesh said ladies first. I second that. So let's start off with you. Does it make sense, or why does it make sense for somebody to look at, let's start off with healthcare and then move on to technology, a healthcare fund right now, whichever team, shape, and form?
Sure. So, Neeraj, thanks for having me. Ladies first is always a good thing. Ladies always have the first and last word. I think healthcare is sort of an interesting sector. If you look at healthcare in the India context, for a few years, healthcare or pharma, was struggling with its own set of issues, whether it was US FDA approvals or whether it was the pricing issues in the US. And I think the life has come back into the sector. In fact, well before we launched a pharma fund earlier this year in our own active funds, we started going overweight, healthcare in this segment. I think with things like COVID that have happened, and it's not about a vaccine in the case of COVID, it's about the fact that the awareness of healthcare as a sector, whether it is in India or globally, has gone up, and healthcare spending is due to increase across the globe. So COVID has been a driver, but healthcare spending is due to increase around the globe. In fact, we think that the Indian healthcare sector will probably grow at 20-25% just because of the increasing healthcare spends. And there are a number of trends, that you can benefit from in healthcare. So healthcare has a lot of impetuses, whether it is government and private spending going up, whether it is India, which has been the pharmacy for the world, sort of moving up the value chain, whether it is the API story. So we can talk about all of these in detail. But now there are, I think, multiple drivers for healthcare as a sector. And I think it's also a sector, one of the questions that comes up, that has been beaten down for the last 4 or 5 years. So from a valuation point of view, while healthcare funds have seen some pickup in returns, I think the long-term trend is just starting in healthcare.
Mahesh, coming on this as well, of course, you have an existing fund, which is the Aditya Birla Sun Life Pharma and Healthcare Fund. I was looking at the returns, 1-year returns of almost 48%, 6 months, 56%. The index has done fabulously well. A lot of people would believe, is my time past already? What's your sense as somebody who looks and invests in equities day in, day out? What's your sense about how strong is this healthcare rally?
So, Neeraj, so we actually turned positive on the healthcare sector about a year back, right? And there were a couple of reasons for that. One is, obviously, domestic story always looked good, and it's been a steady compounder growing at around 12% or so. And there are various initiatives to drive domestic growth over there. The health insurance sector picking up, and also the Indian companies also getting a lot of in-licensed brand into the domestic market and trying to grow that market. So that was always the case. The challenge was on the export front. US, which was a large generic space, had seen a lot of pricing erosion. And we have seen this sector, actually, the large pharma companies had underperformed for almost 5 years, right? From 2015 to 2019, there was a big underperformance. And that's when we thought, okay, fine, a lot of things there in the price, the valuations had corrected. And slowly we were seeing that on the US front, the pricing pressure, which had seen almost 10 to 15% price erosion for the last 2-3 years, was kind of abating, and the price declines were coming down to around 4 to 5%. And many Indian companies which have invested large amount of money in R&D to the extent of around 8 to 10% in the last 5 6 years. A lot of those products were coming into the market, be it in specialty pharma products or in biopharma. Those products were coming to the market, and that would drive growth. And as a result, we turned positive. We launched a pharma fund also. But as we progressed during the year, we've seen that actually the story of pharma has actually turned out to be much better, more so on the international front. Because of the pandemic, we've seen that a lot of Indian pharma companies in the past had suffered because of US FDA was going very strict, and a lot of the plants, many companies had received warning letters, or their plants had to be shut down. But slowly we are seeing that that pressure was easing off. The US FDA was becoming less, rather I would say more lenient in terms of granting permissions. So that helped. And also the competitive intensity in the US generic space has also gone down, because there's a lot of consolidation which has happened because of the pricing pressure. A lot of the large generic players have gone out of a few products, and that has benefited in terms of the pricing environment. And finally, because of COVID, we've seen an uptick, especially for a few category of products. And also, I think China has another role to play. China was a large supplier, not only for API, but also some of the formulations. And with the COVID and after, because of the China trade wars, we've seen that a lot of companies are preferring to at least source some of the API from the Indian companies. And that's the reason why we saw in the last 2 quarters the API story, which was kind of died down in India for many years now, has also resurfaced. So that's provided another leg of opportunity over there. So all in all, I would say that the sector now has done well. The valuations are no longer as attractive as what they were a year back. So on a P multiple or a price to book value multiple, the valuations look fair at this point in time. But I think the overall story, the domestic pharma story, will continue to compound. We don't see any problems over there. And I think even on the US export front also, I think you should see a more steady growth going forward. And there are, as Radhika mentioned, there are other aspects of the pharma. So our pharma fund is not only pharma, right? It's a pharma, healthcare, and specialty chemicals. And we've seen all these sectors actually provide a good long-term growth opportunity. Even in the healthcare space, I mean, just about beginning, right? In the hospital sector, if you look at it, there's still huge amount of underpenetration. India requires a large number of hospital beds. And that's a story where I think you will see huge, tremendous growth going forward. Also, the diagnostic space is also growing pretty good, growing at around 15% or so. A lot of shift from unorganized to organized yet to happen over there. And with COVID and other things, testing will only increase. So that's another sector which is doing well. And wellness in general, I think a lot of focus on wellness. So I think these are all more long-term, I think, sustainable themes. And I would say that investors even looking at now should see a reasonable performance, not such a great performance what we saw in the last 1 year. But I think the sector still looks to deliver steady returns in the coming years.
Yeah, well, actually, just a follow-up, Mahesh, because we're talking about these returns. I mean, yes, viewers shouldn't get, bogged or thinking that they'll make 50%. But do you reckon that the sector itself, or the companies, underlying companies within, could actually have compounding probabilities of 15 odd percent for the next few years? Because that's a very powerful growth mechanism, irrespective. People may not get 50%, but 15% compounded for multiple years is nothing to scoff at. Do you think that possibility exists on the underlying earnings, Mahesh?
Pharma will largely, I think, the huge tailwind what we have seen, I think, is playing out this year. But otherwise, it will be more stock-specific story, right? Individual companies, depending on their product pipeline, what kind of new approvals they have for products, especially for the US market, I would say. I think that will drive the performance over there. And there are quite a few companies that we see in our universe, which we think will compound at around, as we said, around 15% is the sweet spot, which you will look at. We see that. And the domestic pharma sector is growing at around 10 to 11%. And within that, people who are companies which are more focused on the chronic side are likely to see a much better growth. So I think that space would also probably grow in the, mid-teens or so. So I think one can expect at least the better companies in this space, which have got a strong product pipeline, to see that kind of earnings compounding over the next 2 to 3 years time frame.
Okay, viewers, the point Mahesh is making is very important simply because, especially in this space, pharma, it's almost nearly impossible to try and figure out what molecule will work, which plant in a plan will impact the earnings in which particular fashion. So, as investing in equities directly is also difficult, but investing in pharma within that is even more difficult. And therefore, if you don't have the time, but you believe in this space, then maybe more so than anything, any other pocket, pharma in particular, or healthcare in particular, is probably the the best way to play it would be maybe via the mutual fund route. Now, Aditya Birla has this Aditya Birla Sunlight Pharma and Healthcare Fund, which you could look at, of course, amongst others. Uh, but Radhika, interestingly, you made a point about how there could be various kind of themes which will do well. Mahesh alluded to some within not just the pharma space but the healthcare space within. You mentioned some APIs, and I mean, of course, there are some global companies as well because pharma is not necessarily just a local factor, right? And you are coming out arguably with an offering which probably caters to both, if I'm not wrong.
Absolutely. So we are coming out with, I think, the first passive product in the space, that is an Indo-Global Pharma healthcare fund. And I think just to continue with what Mahesh said, when we look at pharma, we don't look at this as a pharma fund. We think of healthcare as a broad theme, which is why the name is healthcare. And that has four segments: pharma being one, diagnostics being the second, because that will pick up, hospitals being the third, and then medical equipment and tools being the fourth. Now, while there is a tremendous story around Indian pharma, which Mahesh already alluded to, there is also pharma is an incomplete story, in our opinion, without global pharma. And I think this is also interestingly true of technology as well. If you look at healthcare, the leading innovation and research that happens in healthcare is actually in the US. So the US today probably has about 40% share in the global pharma market. It must be 5% of the world's population. And in terms of their spending on R&D in pharma, they are top of the charts, and also US companies in terms of patent counts are at the top of the chart. So we think pharma is a two-part story. It's benefiting from the innovative work in biotechnology and research from the US and also some European countries, etc. So there are a fair number of counterparts in Europe, and the consumption story that's playing out in pharma, which is why when we are coming out with a fund, we're trying to make it a package that covers 45 companies from India and across the world.
Okay, this is the Edelweiss MSCI India Domestic and World Healthcare 45 Index Fund.
Yes.
I think the NFO launches on October 6th till October 20th. So, well, you can probably read about that as well and try and invest there. So just keep in mind, viewers, these are the options available. And both our guests believe that healthcare as a broad bucket seems to be very, very interesting. And both funds have some very interesting characteristics. Radhika's, the Edelweiss fund has a mix of local and global companies, as I understood it. As Mahesh said, in their fund, it's not just pharma, but it's healthcare, also has touches of specialty chemicals, maybe, and therefore it kind of encompasses the whole wide bucket. So that's part one, viewers. Healthcare, it's front and center, and therefore we do want to go out and probably be invested in some way with some of these themes, with this theme. The other one is technology, right? Everybody talks about TMT, and nobody can ignore technology in the current shape and form. Mahesh, this conversation, I would love to start with you. What's your sense? We've had, well, not as brisk maybe as a pharma run up, but a brisk run up in technology too. Indian service providers have long been derided for being just that, service providers. Do you think that the landscape has changed even for the service providers to do well, and therefore Indian tech in itself could do? And then, of course, we'll talk about the global tech too. But do you think Indian tech by itself could actually give better multi-year returns?
The technology space has gone through a lot of, India specifically has gone through some amount of transformation. 10, 15 years back, we were just doing the basic application and development, okay, which was the mainstay, outsourcing. Over a period of time, we've seen that Indian companies have tried to go up the space, especially on digital, right? Because they've realized that a lot of money was moving towards digital. And that's where Indian companies were slightly low in terms of the total amount coming in from that space. And around 5 years back, 6 years back, we saw the top Indian pharma companies trying to really up their overall revenues coming in from digital. And that has now reached a healthy proportion. It's anywhere between 30 to 50% for some of the top companies. And that, I think, makes Indian companies well positioned to really capture the spend in the IT space, which is now especially, which is the transformation towards more digital and to cloud adoption were the two themes which were playing out. But COVID has only accelerated that spend in those areas. And we had, recently there was a survey done about the top companies in the US, and they are talking about increasing spend on digital transformation, trying to see that digital that team moves not only at the front end of the customer, but also at the back end. And that is where the spend is going to increase. And I think the Indian companies are now at least well poised to capture that spend. Obviously, with COVID now, what has happened is that the focus on outsourcing, many companies are trying to cut their costs. So a lot of the companies had gone for in-house from outsourcing. There was some trend towards in-house IT spend. That is again likely to change, and we are seeing the outsourcing piece is likely to increase much bigger, and that's what the recent trends have shown in terms of new orders. And that space also, India is very competitive and has got a huge pipeline. Resources over there to cater to that demand. So, in fact, the outlook for the IT sector in the last couple of quarters has actually improved, contrary to the fact that earlier we would have thought that because of the global slowdown, one would have seen a slowdown in the IT spends, and that would have impacted the growth over here, which was true for the first quarter. But I think suddenly we're seeing the spend moving in the new direction, and Indian companies are well poised for that. So the outlook for next year for CY 21, we're actually seeing some upgrade to that growth outlook, and that I think bodes well for the IT sector, and also a lot of companies are seeing some kind. There are some headwinds from the US dollar rate, but overall there is some amount of cost saving which is possible because of the current environment, and we are actually seeing margin improvement also going down for some of the companies. And in fact, many companies are talking about work from home. Large part of their workforce probably will working from home 2-3 years down the line, and that could mean some amount of cost savings, okay, which could be there, which can enable companies to at least maintain their margins or even increase in certain cases. Unlike the trend which was there in the last 2-3 years, we've seen some pressure on margin for the IT name. So the sector looks fairly steady. The growth there is not likely to materially increase. We are looking at top line, the frontline companies growing at around 8-9%. That growth will probably increase by around 2 percentage points, around 10-11% kind of a growth next year. But that's a reasonably steady growth, okay, which one is looking at in this space. And with the kind of profitability, the cash flow generation some of the IT stocks have, I think they look fairly good in this current environment. There's no doubt that the multiples in the sector have really gone up. And again, it's like to do with what's happened in the US tech space, right? Where we've seen the NASDAQ and all the technology companies have got re-rated. So from the valuation standpoint, if you look at the sector is actually at one standard deviation above its long-term average. So it's no longer cheap, but I think the earnings visibility and growth there looks better than what it was a couple of quarters back.
Mahesh, just a quick follow-up to you only. And this Digital India Fund, the BSL Digital India Fund, is it an Indian IT services firm? And my question is, would you reckon that steady state growth in Indian IT space could help investors for multiple years? Because as I said in my opening statement, I think a lot of people deride Indian IT service providers for being just service providers and not innovators. But even those can make money, right?
Yeah, sure. I think the good thing about the Indian IT, though it's not such a high tech, there's a steady growth, but these are good cash compounders, right? The PAT, okay, to the cash flow is almost 100%. And a lot of these are also paying out a large amount of dividends, doing buybacks, so that also helps to create investor wealth. So I think these are steady compounders, I would say. But I think in our fund, we also started looking at 2 years back into overseas companies, because what is happening in the Indian to get a flavor about what's happening globally, especially in the technology side, and also on the cloud computing and also the internet space. There are a lot of companies listed outside India, okay, which we would like to participate, especially of the next generation companies. And that's an area which started to explore around 2 years back, and we have around now 10% of our fund exposure to international. We want to actually take it around 20-25%. That provides some amount of diversity for Indian investors to not only invest into the steady outsourcing story from India, but also to participate in the new generation companies and the technology high-tech companies which are there in the US side. In India, we're seeing a lot of that space still in the unlisted space. A few companies started to come up in the, for example, in the value-added services. What we've seen come up in few IPOs over here. We started to participate in that. But really, if you want to play the large companies, they're there in the US. So a good mix of domestic as well as international companies, I think, can provide a steady kind of some more diversity and good mix for Indian investors to participate in the overall technology story.
Yeah, and I think that's been the beauty of the Indian mutual fund family, if I can call it that, in terms of the innovative products that have come in, which help a viewer or help an investor, sorry, take participation not just within the Indian landscape, but also overseas, and multiple such products there. Mahesh mentioned that their fund invests there. Radhika, I believe you have a US opportunities fund, which is probably the tech offering. Or please correct me if you have some others as well. What are your thoughts here?
So we launched, and I think Mahesh summarized it, but we believe that actually India and the US are very different in terms of technology. India is a sectoral IT services play. However, if you look at all the, and I made this point on healthcare, if you look at all the innovative work that is happening in technology, you don't have listed companies in India. And if you look at themes like cloud, electronic payments, I mean, Paytm is not listed in India, Netflix, Amazon, so the whole OTT space, AI, machine learning, autonomous cars. I mean, these are the five big themes in technology. And technology for us is not a sector. It transcends all sectors. It's there in auto, it's there in entertainment, it's there in BFSI. So technology is a broad-based theme across sectors. We believe that the center of innovation for this theme is actually the US market. It's very much Silicon Valley, which is why the fund that we launched, and we launched this sometime in February in partnership with JP Morgan, is a US technology focused fund, and it focuses on identifying disruptive technology companies. So it's not hardware where penetration is capped out, and it's not Bitcoin, which is completely new. It's countries which are companies which are at the S-curve point. So it's a multi-cap fund across the cap range, about 60 names in the technology space. And one of the things that we've seen is that this trend was already in place pre-COVID. But even if you look at a year like COVID, at a time when earnings growth and EPS growth for S&P 500 is probably -20, for S&P 500 technology as a sector, it's still very, very positive. So this has been the driver even in terms of earnings growth in the US, because people often talk about the valuations of US technology companies. So in the US Tech Fund, which is a JP Morgan run fund, we are looking at that segment of companies, really, I think, disruptive technology.
Got it. Final question, Radhika, and that's again something that I asked Mahesh as well. That you guys within Edelweiss also believe that the growth rates and the earnings growth, that is, therefore the secular growth rate of the underlying companies in the tech space is here to stay. It's not too late for somebody to go out and invest here, is it? Because as you said, everybody questions the valuations of some of these companies, be it in US or now probably even in India.
So I will just make 2 points. One, I get very nervous when people look at my own fund and look at the past performance of 50-60%. And I think viewers or investors should go into any category of fund with moderate expectations. So whether it's Pharma's last year returns or technologies, I think don't use that as a benchmark. You'll get disappointed. Yes, we do believe that there is, and COVID is a great sort of driver for this, but there is an earnings growth story in US technology as a space. However, please do remember again, and I don't want to be the devil's advocate, both sectors we talked about are sectoral funds, so themes have their own volatility. So please think through before investing. But I think both the themes we talked about are compelling themes from an earnings point of view and from a fundamental point of view.
Well, viewers, there you have it. Uh, Both are experts, pretty confident about these. And if indeed the stories are alive and kicking, then selectively at your own way, maybe in an SIP format, might not be a bad idea to try and take exposure to these. Frankly, these are the themes which have tailwinds, so maybe go for it. But Mahesh, Radhika, both of you, thank you so much for taking the time out and speaking to us today on the Mutual Fund Show. Really appreciate your time.
Thanks, Neeraj.
And viewers, thanks for tuning into this leg of the Mutual Fund Show.